When crypto met Wall Street, only one walked away a winner. In this video, we're breaking down the explosive face-off between a bold Bitcoin investor and a legendary stock trader. Two very different mindsets, one massive showdown, and a result that no one saw coming. Before we dive into this financial clash of titans, make sure to like, subscribe, and tap the notification bell. Because whether you're into crypto or stocks, this battle has lessons you can't afford to miss. It wasn't just about price charts. It was about belief, strategy, and who really understands where money is heading next. The players. Experience vs innovation. Meet Robert Chen, a 55-year-old stock trader who survived 3 market crashes, built a $2 million portfolio, and taught trading strategies to thousands of students. His weapon of choice: blue-chip stocks, dividend plays, and technical analysis refined over decades. Robert believes in fundamentals, company earnings, and the power of compound growth through traditional markets. On the other side stands Marcus Rivera, a 28-year-old software engineer who discovered Bitcoin in 2017. Starting with just $5,000 in savings, Marcus has navigated the volatile crypto landscape using dollar-cost averaging, momentum trading, and blockchain analysis. His philosophy centers on disruptive technology and the future of decentralized finance. The challenge was simple. Each trader received $100,000 to invest using their preferred strategies. No restrictions, no interference, just pure skill versus skill in their chosen markets. The clock started ticking on January 1st, 2024. The battle begins. Different strategies, same goal. Robert immediately deployed his time-tested approach. He allocated 60% of his capital to established S&P 500 companies like Apple, Microsoft, and Johnson & Johnson. Another 25% went into dividend-paying stocks for steady income, while the remaining 15% was reserved for swing trading opportunities based on technical patterns he'd mastered over decades. His first quarter was textbook perfect. Robert captured gains from the tech rally, collected quarterly dividends, and executed precise entries and exits based on support and resistance levels. By March, his portfolio had grown to $118,000, a solid 18% gain that most investors would celebrate. Marcus took a completely different path. He split his capital between Bitcoin, Ethereum, and emerging altcoins, using a combination of long-term holding and active trading. His strategy involved buying major dips, taking profits during rallies, and reinvesting gains into promising DeFi projects and NFT collections. The first quarter was brutal for Marcus. Bitcoin crashed from $45,000 to $38,000, and his portfolio dropped to $87,000. While Robert was celebrating steady gains, Marcus was down 13% and facing criticism from followers who questioned his crypto-focused approach. Mid-year madness. The tide begins to turn. By June, the market dynamics shifted dramatically. Traditional stocks faced headwinds from inflation concerns and Federal Reserve policy changes. Robert's conservative portfolio, while stable, struggled to maintain momentum. His gains slowed to a crawl, and his portfolio value stagnated around $125,000. Marcus, however, had positioned himself perfectly for the crypto summer rally. Bitcoin surged past $60,000, Ethereum reached new highs, and his carefully selected altcoins exploded in value. His aggressive rebalancing strategy during the earlier crash had loaded his portfolio with undervalued assets that were now paying off spectacularly. The software engineer's portfolio rocketed to $185,000 by July, completely reversing his earlier losses and putting him significantly ahead of the veteran trader. But Robert wasn't giving up. He recognized the changing market conditions and made a crucial decision that would define the remainder of their competition. The veteran's gambit. Adaptation under pressure. Robert did something that surprised everyone, including Marcus. Instead of doubling down on traditional strategies, he allocated 30% of his portfolio to technology growth stocks and even purchased shares in Bitcoin ETFs. This wasn't abandoning his principles, it was evolution. His decades of experience taught him that successful trading requires adaptation. Robert used his fundamental analysis skills to identify undervalued tech companies positioned to benefit from the AI revolution. His picks included semiconductor stocks, cloud computing companies, and cybersecurity firms. The gambit worked brilliantly. Robert's hybrid approach captured both the stability of traditional investments and the growth potential of emerging technologies. His portfolio climbed to $165,000 by September, closing the gap with Marcus and proving that experience could compete with innovation. The final quarter, winner takes all, October brought unprecedented market conditions. A major banking crisis spooked traditional investors, while institutional adoption of Bitcoin accelerated. Both traders faced their ultimate test as global economic uncertainty reached fever pitch. Robert's diversified approach provided stability during the chaos. His dividend stocks offered protection during market downturns, while his tech positions benefited from flight to quality trends. His experience managing risk and controlling emotions during crisis situations became his greatest asset. Marcus leveraged his deep understanding of crypto market cycles. He recognized the banking crisis as a catalyst for Bitcoin adoption and went all in during the panic selling. His bold move, buying Bitcoin at $52,000 while others were selling, demonstrated the conviction that had carried him through previous market storms. The shocking revelation: what really happened? The numbers tell only part of the story. While Marcus achieved higher returns, the psychological toll was immense. He experienced multiple 30% drawdowns, sleepless nights, and periods of severe stress that affected his health and relationships. His victory came at a personal cost that money couldn't measure. Robert, despite losing the challenge, demonstrated the power of risk management and emotional control. His steady approach provided consistent returns without the extreme volatility that plagued Marcus. More importantly, Robert's strategy was sustainable and scalable, something that Marcus's high-risk approach might not be over longer timeframes. Lessons from the battle: what every investor should know. This competition revealed crucial insights for every investor. First, there's no single best strategy. Success depends on market conditions, risk tolerance, and individual circumstances. Robert's traditional approach provided stability and consistent returns, while Marcus's aggressive crypto strategy delivered explosive gains at the cost of extreme volatility. Second, the importance of emotional control cannot be overstated. Robert's decades of experience managing fear and greed gave him a significant advantage during stressful periods. Marcus's youth and risk appetite enabled him to capitalize on opportunities that would have paralyzed more conservative investors. Third, diversification and adaptation are key to long-term success. Robert's willingness to incorporate new asset classes into his strategy showed that even experienced traders must evolve. Marcus's deep specialization in crypto markets gave him expertise that traditional traders couldn't match. In the end, it wasn't just about crypto versus stocks. It was about timing, conviction, and playing the long game. Whose side are you on? Bitcoin believer or stock market master? Let us know in the comments and share what you would have done differently. And if this financial face-off got you thinking, be sure to like, subscribe, and send it to someone stuck choosing between two worlds. Until next time, stay sharp, stay strategic, and may your next move be the winning one.